Hello everyone, welcome to Simple Accounts with Faye. So today I'm going to explain the double entry, what is the account, what credit and debit, difference between them, balance brought down and balance carried down. Okay, the first thing first, the debit, the T account, it comes from the name, from the letter T because it looks like T. And it has two sides, one side debit, which is the left side, and credit is the right side. Okay, what is debit and what is credit? Anything that received or money in or anything in by the company, anything that the company receives, it's going to be on the debit side. Anything that the company will give, that will be under the credit side. Okay, let's see some examples. So if we have an increase in asset, if we have an increase in expenses, that will be under the debit side. And if we have capital, sales and income, liabilities, that will be under the credit side. Okay, and next, balance brought down and balance carried down. Balance brought down is the opening balance for this month, which was the closing balance for the last month. Okay, that's why we bring it down to this month. So it will be the opening balance for this month, and when we do a date, it will be like the first day of the month, and the balance carried down will be the closing balance for this month, and will be the opening balance for next month. And if we're gonna put the date, that will be the last day of the month, either 31st or 30. So let's see some example. Okay, we have this past paper from 2017-2018. We have this company called Mental Hope, and they gave us the balance, trial balance, which was in September, 30 September. This is the previous month. That means that's the balance brought down because it was the closing balance for last month and it's the opening balance for this month. Okay, you don't need to confuse yourself. Anything that will be the opening of this month will be balance brought down. Okay, and if you go down, they said during this month of October, 31st of October, this transaction happened. Okay, so they want us to do a T account of these transactions. Okay, so first thing first, we need to do the T account. Number one, T account. Number two, we will do the trial balance. Number three, we will add the transaction. Okay, let's start. Okay, number one, we're gonna do T account for each of these ones. Okay, we're gonna open T and name them. Okay, let's do the capital, for example. So if I'm gonna do the capital, we're gonna open T account like this, debit side on the left, credit side on the right, and this is called capital account. So we're gonna add a label, capital. Okay, and we're gonna add, as I said previously, here, capital always credited. So we're gonna go and we're gonna add this amount, 11,500 on the credit side. Okay, 11,500. But what we're gonna put it, we're gonna name it as balance brought down. Okay, balance brought down. Why? Because it's the opening balance for this month and it was the closing balance for last month. Okay, let's carry on. So I'm gonna do all of the account and I'm gonna enter each transaction. Okay, so if you want to know what is gonna be credit and what is debited. You can go and see, take a picture for this one. Any asset like bank, cash, any increase in expenses like motor vehicle expenses, any rent, anything that will be under the debit. And under the credit will be capital, sales, any income, any liabilities, so depreciation, and so on. Okay, so I'm gonna do a T account for all of these ones, and I'm gonna put as a balance brought down for each of these transactions. Okay, let's go down and see. Okay, all right, now as you can see, I made capital, bank, vehicle. So we put the depreciation, which is liability. We have account payable, vehicle at cost, inventory, sales, purchases, and we have motor expenses and all of the other ones. Okay, so let's look at this one. I added all, if you can see, the capital one, balance brought down, that will be in the first of the month. I added the month, the balance brought down, and the amount. Okay, so this is what we're gonna start with. Next, if you see the bank, so I'm gonna do the first three, the rest you can do them by yourself. Okay, so let's see the bank. Bank is an asset. As I said, asset is always debited, so we're gonna put it first of the month, balance brought down, and I put the amount. Let's do last one, third one. It's the vehicle, but this one is depreciation. Depreciation is a liability. Liability is credited, right? So we're gonna put T account as a T. This is debit, this is credit, if you can see. And I put the date, I put balance brought down, and I put the amount. Done. Easy, easy. Now you can see, you can do the rest by yourself, and this is basically what you need to know. Okay, now let's move on to the second part of the question, which is the transaction. Okay, so we have these 10 transactions, and we need to take this transaction and put them in the T account that we already made. Okay, so in this transaction, if you notice, we have a date. So you have the date already, you have the amount already, but you need to know what is debit and what is credit. Okay, so let's take one example. Let's start with the first one. Okay, so in the first transaction, so we're gonna go from 1 to 10. I don't want you to jump and jump and jump. You're gonna miss one of these transactions. So the best thing to do is to finish one, then move to the second, then the third. Okay, so we're gonna start with the first one. That will be on the 1st of October. Okay, so it says we bought medical supplies on time on credit from Treasure Ltd. Okay, the amount is 200. Okay, what I want you to focus on here, I want you to focus on what accounts are we gonna put in. Okay, so we bought. Okay, focus on bought. That means when we buy something, that's purchase, right? Purchase. And the second thing is we bought it from where? We bought it from this company name, Treasure Ltd. Okay, so another account name is called Treasures Ltd. Okay, now we know which account. We know that's 200. We know the date. It's 1st of October, right? Now, which one is debited? Which one is credited? Let's think about it, okay? So, if we purchase something, that's mean, okay, I'm going to explain in this one. Okay, that's debit, that's credit, okay? So, if we purchase something, is it something in, or did we give something? No, we purchased something. That means we have something in, right? That means the purchase will be debited. Okay, and the Trestle Ltd, when they give us this, the medical supply, that means they gave away something. They give away something. That means we're gonna credit the Trestle Ltd. Okay, now we're gonna go to purchase account. Okay, there is one trick. Okay, so now under the purchase account, the reason I said it's debit and credit, that means we're gonna put it under the purchase account, which is, if we have purchase, this transaction will be debited. Okay, will be here 200. Okay, first of 10. Okay, but what's the name of this transaction? I know it's a bit complicated, but we have to put the transaction as the opposite. So when I say what is debited and what is credited, that means under the account it's gonna be debited. Under the account of Trestle, credited. So we're gonna put the 200 here. Okay, but we're gonna call it purchase. Is that clear? Okay, and here it's gonna be Trestle. Is that clear? I know, a bit confusing, but that's okay. I know it's a bit confusing, but when we do it multiple times, you're gonna understand. Okay, let's see. Okay, so under the purchase will be 200. So we're gonna go to the purchase account. Okay, this is the purchase account. That's mean. Okay, and we will debit how much? 200 under the name of Trestle. Okay, next we're gonna go to the Trestle. Okay, we're gonna go to Trestle and we're gonna credit. Since we debit here, we have to credit somewhere else. Okay, so we're gonna go Trestle. Where is the Trestle? We open Trestle already. Okay, and we're gonna add 200 here. Okay, and now we have debit and credit. Okay, next we're gonna go here, second transaction. Okay, so first the transaction is done. Okay, let's go to the second transaction, which is gonna be on the 8th of October, which is this one. 8th of October, make sure that you have the correct date on your transaction. It says sold, make sure to know, make sure you have a highlighter with you in the exam so you can highlight the names. Okay, sold medical supplies cash, for cash. Okay, so that's mean we have sales account 350 and we have cash 350. Okay, so sales sold medical supplies for 350. Okay, when we sell something, that's mean we give away something. That's mean this is credited. If you know, I put this one here, sales, it's credited. So if you know, you know, credit. Or you can say we gave away something. That means it's credited. Cash, we received cash. Okay, that means this is debited. Now, you know, as I said, this is cash and this is sale. Okay, now let's think about that. Okay, so under sale, the 350 will be credited. 350 will be credited. Okay, okay, what's the name? We're gonna put cash. I know it's a bit complicated. And now for the cash account, which is the cash account, we will debit 350. So 350 will be debited, but under what name? It's gonna be sales. Okay, is it clear? Maybe now it's a bit more clear. So let's go and see the transaction. So we're gonna put cash and sales. Okay, so cash, we added this, we debited the cash 350, and sales, we go to sales account and we credit the sales account. Clear? Yes. Okay, now next. Now the third transaction, it says 3rd, it's 10th of October, so paid for fuel for motor vehicle in cash. Okay, let's think about it. So what do we have? We have fuel for motor vehicle. Okay, that means it's expenses. Motor vehicle expenses. Okay, and in cash. Okay, the other account called cash, both 50. Yeah, now let's think about it. So when we give £50, that's mean we're gonna credit or debit the cash. Correct, we're gonna credit the cash because we gave away cash. That means we lost cash. Okay, that means an asset is down. Okay, motor vehicle expenses is debited because we gained fuel. Okay, now we have more fuel. Okay, in fuel, that means debited 50. Okay, now we can open the T account. Already we have it, but I'm just repeating the process so you know what do you put. Okay, so under the motor vehicle expenses, we're gonna debit the £50. Okay, debited the £50 under cash. Is it clear, guys? I know it's a bit complicated because you have to debit, and then a lot of people gonna ask, if we debit this one, why don't we add this name? Okay, I know it's a bit confusing, but this is how it is. Okay, and under the cash, we already have cash open, and we put transaction already previously. So now under the cash, it's gonna be credited £50. Okay, for what? For motor vehicle expenses. Okay, let's go to the cash. Already I think we put something in the cash account. Let's go to the cash account. Yes, you see the cash account on the 8th we had some sales. Now we're gonna put motor vehicle expenses as a credit because we lost money or the asset gone down. Okay, which is the cash. Okay, and if we go to the motor vehicle expenses, we will put motor vehicle expenses. Motor vehicle expenses, we will put debited. Okay, clear? Okay, let's take the fourth one. Okay, I know it's long, guys, but we have to go through one by one so you can understand. Okay, now number 4 transaction, it says Susan Fell withdraw. Susan Fell is the owner. You see, this is a lot of people gonna make a mistake in this one, and they're gonna open an account called Susan Phil. Susan Phil. No. Why? Because she is the owner. And if she put money in the account, that's called capital. And if she took money out of the account, that's called drawing. Okay? Why is that? Because she is the owner of the company. Okay? So if you go up, a lot of people are going to ask, how do we know? It's here. Susan Phil Cold is a small book run by Susan. Okay? Let's go down. I hope that's clear, guys, so we don't make mistakes. Okay, Susan Phil withdraw 1,000 from the business bank account for her own use. Okay, that's mean we have drawing. Okay, 1,000 and from the bank. And then next one is going to be bank 1,000. Okay, now if you think about it, when she draws something, okay, that's mean the bank lost money, right? That's mean the asset gone down, which we're gonna credit the bank account. Drawing will be debited because we are losing money. Okay, so when we open an account, I'm gonna repeat this one more time. So if we open bank, gonna be credited 1,000. Okay, but 1,000 we'll call it drawing. Okay, and if we open bank drawing account, we will debit the 1,000 under what name? Bank. Okay, now let's go and add it, because we already have bank account open. You don't need to open every time. Okay, so the reason I'm doing this, so you don't get confused by naming. Okay, so since we already have account called bank, we're gonna open one called drawing. Okay, so we have the bank already. Look, we have it here, and we had the balance brought down already. So, and then now we're gonna credit the 1,000 as a drawing. Yeah, we're gonna open one drawing account and we're gonna debit the bank. Okay, here is the bank and we're gonna debit it. Is that clear, guys? Okay, now the rest, it's the same, different. Now I'm not gonna do it in details, so I'm gonna go through it quickly. Okay, so number 5, it says sold medical supplies on time to Jet. Okay, that's mean sold means sales, to Jet, that's Jet account. Okay, so we have sales 560 and we have Jet 560. Okay, so sales, as you know, is always credited, and Jet, that will be debited. Okay, if you think about it, we sold something, we gave away something. Okay, we gave someone. Okay, Jet, he received something, that's mean is debited. Okay, 560. But this did not end. They said he returned by the customer. Okay, medical supplies returned by the customers and full amount they refunded them. Okay, by check. Okay, so we're gonna add. Okay, let's add the first one. So we're gonna go to bank and we're gonna put this transaction first. We're gonna add a sale and we're gonna put a Jet account. Okay, so we're gonna credit the sale, go down. We have sales account already. What is the sales account? That's the sales account here. So we're gonna credit Jet 560. And where is Jet account? This one is Jet account, or you can open Jet account if you haven't opened. And we're gonna debit. We're gonna debit it 560. 560. Okay, is that clear, guys? Okay, next, same transactions, so we're in number 5. Okay, so they said they returned the customer 120 return. So okay, this is done, the first part of it. Now they said it's return our supplies. Okay, that's mean return in word. Okay, return to us, the in, return in the company. Okay, 120 refunded by check. Check, usually if you see check, that mean is bank. Okay, bank 120. Okay, that's mean, if you think about it, now we don't know. Okay, if you want to think, oh, which one is credit, which one is debit. Okay, when we have return inward, that's mean we received our sales, we received our supplies. That's mean this is debited, bank is credited, because we lost money, because we gave them away their money that they have paid already. Okay, so bank credited 120, bank, okay, we credited 120. Okay, and return inwards, that's gonna be different account, and it will be debited this. Okay, 120. Is it clear? I know that the transaction, a lot of people gonna make so many mistakes here. Be careful, guys, don't get it twisted. So when you see 2 transactions in one day, make sure to do the first one, the first part, and highlight it, then go to the second part. Okay, next, bought medical supplies, number 7, bought medical supplies from Treasures 790. That's mean purchase, bought mean we purchase 790 on time. Okay, bought medical supplies from Treasures 790. Okay, so purchase is expenses, that mean we received more medical supplies. Okay, that's mean it's debited. Trestle, he gave us the medical supplies, so he gave away us, so it's credited 790. So we already have purchase account, we already have Trestle account, so we go and include these transactions. Okay, so we go purchase account. Okay, so this is purchase account, and then we're gonna do 790 debited, and then Trestle, here's Trestle account, and we're gonna credit it. Okay, is that clear, guys? Okay, now we have last 3. Number 8, bought medical. Bought mean purchase 1000 from Danny. Okay, Danny. Okay, but they said we didn't pay it all. Oh, sorry, it's 1100. Okay, so they said we paying 700 immediately. Paying check, that's mean it's bank. So we paid now 700, and the rest will be paid 400. Okay, 400. Okay, so what we're gonna do here, so we gonna do a purchase that's debited 1,100. So we go to the purchase and we gonna debit 1,100. Where is the purchase? Yes, and we're gonna purchase 1,100 from Danny, and we're gonna credit the rest. Okay, so we're gonna credit Danny and credit bank because we lost money. Bank, and we call it purchase, and Danny, this one is Danny, and we're gonna, okay, is that clear? Next is next 9, banked check from Jet 1,000. Banked, that mean bank, that mean we received 1,000 from Jet account. Okay, 1,000. So okay, so banked mean we received in the bank account 1,000 from Jet. Okay, so we received, that mean is debited, and Jet gave us 1,000, that mean he is credited. Okay, we go under the bank, we already have the bank, we already have the Jet, we add under the debit side 1,000 under the name of Jet, and we go to Jet account and add 1,000 under the name of bank. Okay, last transaction, paid wages in cash 130. Okay, so we have paid wages in cash. Okay, so we have cash, which is recorded in, so usually we do salaries, but he said, this guy or this transaction said, the wages we will put it under other expenses account. Okay, other expenses. Okay, so we paid cash, that means we lost cash, so 130, we paid them, that means our money gone down, so it's gonna be credited, and we will debit the other expenses, and we will put it on the account. Is that clear, guys? How do we do the T account? Now I'm gonna explain how do we close the account, what is the balance carried down and what's the balance brought down. Okay, bear with me, guys. Okay, so now we have similar to this transaction, but we have to close the account. In order to close the account, debit and credit has to be equal. Okay, debit and credit, debit side, credit side has to be equal. Okay, so for example, in the capital we didn't have other transaction, we only have the opening balance for this month, for the October month, and it was 11,500. So balance brought down here, and in order to balance both sides, okay, so by the first of the month we open with 11,000, so balance carried down to the other side of the transaction to make it equal, and carried down mean the closing balance for this month. Okay, so we close balance. Okay, so balance carried down mean the closing balance for this month will be 11,500. Okay, and for the next month we have to, if we added balance closed balance for this month, we have to do balance brought down for the next month. Okay, because the reason why we're gonna put, a lot of people gonna ask, oh, we have balance brought down already. Okay, but this one balance brought down for the month of October. Okay, make sure that you have the number correct. Okay, balance brought down, yes, they gave us here 11,000, that was on the end October, right? Now, when we close, the close was the same. Now, we need to do the balance brought down for the next month. The reason why we're doing balance brought down, because we're going to do, in this question, I didn't read the question, sorry guys. So here it says extract the trial balance for the 31st of October. So we have to do a trial balance for the end of the month. And we're going to use this balance brought down, okay? So I know you're a bit confused now, but let's go through bank and then I can explain everything, okay?